They also weren't dumping bonds to shore up their RMB, the Chinese currency. That was the dumbest thing I've seen yet. But these guys here actually wrote it down and even got their editor to publish it. This is off too. China is not de-dollarizing so much. China cannot de-dollarize because the US pays in dollars. China also cannot get away from euros because the EU pays in euros. China is not so much dumping dollars, and they're not dumping euros. They're simply moving them. They're getting the dollars out of American banks. They're getting the euros out of European banks. It is true that the US dollar is the world's reserve currency, and the USD is accepted everywhere. And it's also true that China earns more dollars than anybody. Same with euros. And when China sold these treasury bonds, they did not get away from dollars because they received US dollars when they sold them. They've got the dollars. But what I think they're doing is getting the dollars previously held in Belgium out of Belgium. Belgium and their friends right now are trying to figure out how to spend Russia's money that's in European banks. And so China wants their money gone out of there. Here is the chart again. They need to buy stuff from South America, and they don't really want to use their own RMB to do it. So they'll use dollars for a lot of that trade. They just won't use US banks to move those dollars, or European banks that nobody can trust anymore. They'll be using their banks. China is setting up bilateral trading lines and swap lines using renminbi. Those are becoming more popular and common. But they're also happy to keep doing things this way, trading in dollars and euros, and without the risk of having any of their reserves seized that are in a European bank or in an American one. China is setting up an entirely new banking system, using gold, using RMB, swap lines. Even Bitcoin is in Hong Kong now. All those things, plus a whole lot of dollars and euros. Who else might want to be part of such a system? Russia, of course. Russia also runs large trade surpluses in euros. Saudi Arabia, the UAE, Qatar, huge trading surpluses in USD and in euros from those countries. These countries merely need a system of banks that are completely outside the US and Europe, so they can take their dollars, take their euro, and put it into their own bank system instead of ours. Consider finally how fractional reserve banking works. Suppose a Chinese company has a bank in the United States. Bank of America account, let's say, with $1 million in it, average daily balance of 1 million USD. Bank of America can take that $1 million and create loans with it in the US economy. Home mortgages, loans to expand businesses, credit cards. That $1 million held on deposit can create up to about $8 or $9 million in new loans, new economic activity, new loan assets for Bank of America, new interest income for them. But China is closing accounts worth billions and billions of dollars, and they're moving them out of American banks into their own. It's now China banks who can now create loans with all that new money. They can create US dollar loans to be repaid over time, either in USD or in RMB, whatever they want. And China also learned that they can never, ever be in the position that Russia was. Their money cannot remain in our banks for even a short time, not even over the weekend. If that means they take a loss, instead of waiting a bit longer, they take the loss, get it out, get it to safety, and then they can lend to whomever they want with much less risk. We Americans have treated our currency, the US dollar, as a weapon, a source of power. And it is, indeed, a powerful weapon. And China and Russia, all these other export-rich countries in Asia, the Middle East, South America, now they've got it. Have a great weekend. Be good.